Hi, everybody. I'm Dale Pinkert. I'm your anchor here in FX Street's live analysis room. We have the Bank of Canada with an interest rate decision, which makes me want to go right to the Canadian chart here because yesterday we made a great call here in LAR. We identified support here in Canada with the horizontal old resistance, new support. I believe Kleber bought it at 38 for a rally to 130. So LAR was on top of this. I still think we go to new highs over 131 again. And looks like it's underway. If you were long from yesterday in front of an interest rate decision, I would recommend minimum taking half off here, tightening up stops, and nothing wrong with booking over about 80, 90 pips from our buy zone yesterday. So congratulations to Kleber on that call yesterday and anyone else who went with the Canadian buy at a level that was identified early in the session yesterday before it got here. Took out the wedge line a little bit, but held this, never closed under important support at 40. So take a bow, Lar. Everyone take a bow on the Canadian. Hi, Alien, Papa, Kev, Doji, amateurs. You didn't change your handle. We should be live now. We are live. Suggest you refresh. Okay. Can anyone hear me? If you can hear me, give me a Y. Anyone hear me? You see the video, Doji? Okay. Doji's good. So did you guys hear what I said? Take a bow, Larians. We identified the buy point. Kleber called it. He had a buy at 29.38. That was within a pip or two of the low yesterday. I'd recommend that you guys book profits if you went with the trade. I think Kleber got out at 130. So in front of this interest rate decision by the Bank of Canada, take your 80, 90 pips right here. At the minimum, take half and tighten up your stop. Still think we're going above 131, but anything can happen. Lucic, welcome to our community. Everyone welcome Lucic to our community. That's a new handle. Oh, it's Lusk. Welcome, Lusk. Refresh, Khalid. Welcome, Lucic. Hi, Fane. Maksud is back. I see new handle, Mushin. Welcome, Mushin. Okay. So, for those of you that didn't hear me earlier, I think everyone in LAR should take a bow for calling the low of this pullback on Canada. The buy point was identified yesterday. Clever bought it at 38. I'd be taking profits right here in front of the Bank of Canada, or at least half. I'd be taking something off, Khalid. I do think we're going above 131, but I just don't like the risk on a Bank of Canada interest rate announcement. So it's kind of a red event for me. And you have a nice trade, you know, if it goes without you, at least take half off. Be a conservative gambler and take half, Khalid. Conservative gambler. We have an interview with a guy who was very well received last time he was on, Pete Souris at Forex Shrink. Is going to join us in a little bit over an hour. So if you have psychiatric issues, stand by for our interview with Forex Shrink. He'll put you on the couch. Hi, Jose, Abel. Use less leverage when you trade the markets. Use wider stops so you don't get picked off. Don't hold positions into central bank decisions, or you might lose your head and your account will be dead. Use less leverage. Take a look at what Alien sent. All right, still bearish the Aussie. Nice. Looking for 71.30. Okay. What else do we have here? Nice. Nice. Nice Canadian trade. Lars the best, man. Because it's not about me and it's not about you. It's about everyone. Nice work, Lar. That's okay. So nice trade, Goldie. Goldie caught the Canadian. How many caught the Canadian from yesterday? Give me a Y if you did. So Alien took advantage of it by being short Aussie. It's the same trade, long Canada, short Aussie. Okay, Alien short the pound right now. We're probably looking for 320. 350. Okay. I agree. Nice. So Alien's doing some scalping in front of the ECB tomorrow. We will be covering the ECB live with Val, and I don't know if Yohei's going to be here, Mauricio, Adam Button, Dr. Severaman, Dale Pinkert. We're going to have a great. Okay, that's fine, Maury. Good hunting on that, Alien. Everyone wish Alien luck on that as well. Good hunting. Thank you, Alien. Thank you, Goldie. And Khalid took half off on his Canadian trade. Even gamblers can be conservative. So who else is in the house today? Code UK Kev is here, Doji, Abel's here, Papa Goldie, Richard, welcome back to LAR. Mushin is new, welcome to both Mushin and Maksud. Fame is in the house, Jax is here. How's everyone doing? So kind of an even, Clever, I already congratulated you on your buy in the Canadian, I think within a pip or two. So I nominate Clever for the Man Award. I don't think he's ever won the Man Award. You are the man, Clever. Here was a Canadian. You bought it at 38, I think within a pip. Got out at 30 on this initial pop. Nice work. So I nominate Clever to be the man. Anyone second that nomination? Can't get much better than buying the low within a pip or two in Canada yesterday. Hi, Jose. How are you? Who seconds my nomination of Clever to be the man? Anyone second it? Okay, nice trade. Who seconds my nomination? Canada's coming off. Who thinks Clever is a great addition to our community? Give me a Y. There's my Y. So the law of attraction continues to work. Veteran's taking a shot at the short side here. Everyone congratulate Veteran on his guppy short. Veteran was short the guppy from up here, and it got to his target under 185. Okay, and Clever's still short, and Veteran, you scalped 100 pips out of it from here. Nice work. All right, so here's the Man Award to Clever. Congratulations, Clever. That's your first man award. You probably win quite a few in the days ahead. So I think we have the best community on the net. Of course, I'm not completely objective about it, but I'll tell you something. I have moderated many trading rooms during my career. I've mentored prop traders, retail traders, and this is the best project I've ever been a part of. It's a compilation of all those years of doing other things to realizing the best thing to do was to have a community sharing their ideas to create a mastermind environment for all who show up here. And if you believe that Mauricio and I have accomplished our mission, give me a Y. And the law of attraction is in, complete motion. We continue to attract very good traders. Okay. Tico, you have a link for us to see that? So you're down to 15-minute charts. That's a little bit of a change for you. I see a new handle in here. Dev is in here. Everyone welcome Dev. Dev, feel free to share your work here. This community is not about me or you, it's about everybody. And we all collaborate. We communicate through pictures, screenshots. So feel free to go ahead and share your looks with the community. We're all captains of our own ship. We're all responsible. Okay. We're all responsible for our decisions with our capital. Here's a screenshot for Clubber, from Clubber. Okay, so here's his S&P look. $20.60, $20.70. Yeah, they're all the way up. I'm thinking tomorrow. Tomorrow, if it's not tomorrow, it's next week. It's either tomorrow or the 28th. Nice look, Clever. We're almost there. Everyone thank Clever for his resistance levels in the S&Ps. So we trade all asset classes in here, not just FX. We trade gold. We look at oil, everything. Everyone thank you. Thank Clever. Yes, inflection point. I think it's tomorrow on the ECB. Although I think we'll go to 14.20 and then down. So right now the euro could do anything. I'm a buyer under 12.5. I'm a seller at 14.20 or better. Everyone welcome Dev to our community. Okay, so Dev, if you could get some screenshot software, a picture speaks 1,000 words. So we communicate, it's much more effective communications to share a chart. And then instead of just trying to text it. Okay, so you may want to get some screenshot software to share your ideas. Okay? because that doesn't help anybody. I'm short, I'm long, I'm short, I'm long. Yeah, there you go. Thank you, John. So it's going to be a pretty dead session today. It's mainly going to be evening up. We're evening up into the ECB tomorrow. Yen's starting to run out of juice. This should be part of the inflection point as well. Should be a decent short setting up here in the yen. I'm not sure if they're going to try and run stops here first. Still viewing if the S&Ps are going to flush. They're going to flush the August lows. So should the yen. Maybe it wants 21 one more time. 21 would be a sale for me in US dollar yen. Any views on the yen in here, guys? This should also be a shorting opportunity if the S&Ps are going to fail. There should be some risk off. You're short the Canada. Okay, that's pretty high risk into the Bank of Canada. How are you, Kev? UK Kev, John 573. Ali, how are you? Good one. Good one, Alien. Is that you? Oh, that's a statue. I thought it was an alien. Good one. 2093. Okay. That's close enough for government work. What do you got, Khalid? Thank you, Alien. That's a good one. It's sad, though, because it's probably true. Khalid's got a view in the yen here. What's going on? $20.50, 22. Maybe it's going to blow. Anyway, thank you, Khalid. Sad but true. Hi, Malcolm. Thank you, Khalid. Okay. Everyone doing all right? So we'll get some kind of stop hunt here. Euro pound hanging out around this trend line break here. I'm flat. Everyone doing okay? Jax, how are you? Fame, how are you? I think Yohei's in here today. Hello, Yohei. How's it going with your programming, buddy? Who's been watching Yohei every morning for his London report? Who's watching Yohei Elam from Forex Crunch on his Gold's Dancing? Alien thinks we're pulling back to 11.5. I think he's right. We're going to pull back to 11.50. Might be a good buy down here. Thank you, Deb. Hi, Simon. How are you? Okay. What's your risk? Yohei has a great command of both the fundamentals. I think 2 hours before this. 2 hours prior to LAR. There you go. So he has a great command of both the fundamentals and the technicals, which is unusual. People usually lean one way or the other. He has a very holistic view of the markets, including both fundamental analysis with the technicals. So if you're up that early or you're from overseas, tune into Yohei Elam. Everyone doing okay? Thank you, Ellie. 48.23. Back up here. Here's a look from Jose. There's a guppy look from Jose. It's a daily. He's looking for 87.70, I believe. Thank you, Jose. Everyone thank Jose for his guppy daily look. Thank you, Jose. Everyone doing okay? So get all your technical levels ready for tomorrow after the ECB. Remember, we'll be covering it live. Mauricio's put together a whole crew. Nice look on the Euro Yen here. Back down to 29. Nice. Alien, another great contribution from Alien. Thank you, Alien. Nice look. Thank you, brother Alien. Thank you, buddy. If you want to be a star, show your charts in LAR. If you need to buy a new car, come on and hang out in LAR. Use less leverage, widen your stops, don't get picked off. We'll teach you how to trade in LAR. Be a star, buy a car. LAR, give me a Y if you love it. That's for you, Luimo. Luimo was asking about the peso. Huh. Thank you, Jose. Nice look at the peso by Jose at Guardian Trust FX. Thank you, Jose. So stand by, everybody. We're about 45 minutes away from speaking to we're doing okay. So WTI is pretty quiet. Looks like we're going to get an ABC in gold here. Euro wants to pop. That's okay, no problem. 2037 S&Ps. I miss your screenshot, Clever. What do you got? Looks more like veterans work. Oh, Euro Kiwi. Okay. Nice Euro Kiwi look. $17.1. Okay. Here's a look from, thank you, Khalid. Here's a look from Tico. Pound CAD, got some divergence up here. It's a nice look, Tico. Take a picture. 1, 2, 3. 1, 2, 3. Looking for a turn in pound CAD, 15 minutes. Everyone thank Tico. Thank you, Tico. Always a pleasure to see your work. Thanks for your contribution. Everyone thank Tico. Okay. What's going on, Malcolm? How are you? Hi, Simon. How's it going? Stand by for our interview coming up. Everyone doing okay? What do you got, Khalid? Another nice wedge. Oh, the Dow here. Okay. Nice look, Khalid. Good luck on that one. Thank you, Khalid. Everyone thank Khalid. Looks like a rising wedge in the Dow. You're waiting for that, huh? Okay. I'll be back in 5. Stand by. Okay, I'm back. Back. Quick break. Might go to 12:30. Everyone doing okay? Looks like ABC to me, buddy. Here comes Ferrari's opening trade. Everyone doing all right? I wouldn't do much in front of the ECB, my friends. How are you going to know? How are you going to know institutions come in? What's the market tell on that? Just price action or what? I'm curious. What about Aussie yen? Do you think the guppy will perform better to the downside than Aussie yen? You might be right. Because Chris Laurie believes Aussie yen is the best risk-off currency. And we haven't gotten back to the breakdown yet. We're still a couple hundred pips away. And the way okay. Thank you, Clever. Okay. Okay. What's your number in the S&P, Ali? I'm always open to learning. We're either growing or we're dying. So I prefer to grow. What's your S&P, Ali? S&P number, Ali, if you care to share it. Everyone doing okay? We're about a half an hour away from Pete. Who knows Pete Souris at Forex Shrink? Anyone know him? I know that Alien liked Pete last time he was on. Remember him, Alien? Pete Souris at Forex Shrink. How are you, Simon? Pegasus is in the house. What kind of fool am I to trade in front of the ECB? I should be flat for that and react to that instead of predicting it. I know I'm crazy. I know I'm a Meshuggah. Dale, oi, such a Meshuggah. You wrote that in invisible ink, Decadic. Everyone doing okay? Okay. See you, Doji. Thanks for hanging out. $63. Okay. Thank you, Ali. What's 31.25? Oh, okay. Yeah, sell that rally. Okay. I think that was Alien's number too. Boy. No. There goes Canada. Ferrari is open. Shorted. Short Ferrari. Short Ferrari. You do it in thirds? Okay. I like that. Thank you, veteran. Everyone doing all right? Okay. Yeah, we're going to have to do an interview. Who would like to hear me talk to Clever? Do a call, do a hangout with Clever. Give me a Y. Do you have a Gmail address, Cleb? Let's do that next week in the opening hour. You could share your journey and what you do in the markets with people, show your screen. You game? We'll do it next week. So if you have you need a Gmail address. Send your Gmail to Mauricio. And we'll do an interview next week. Okay. Okay. Whenever. No pressure. Whenever you want. If you don't want, that's okay too. Everything's okay. EG still acting heavy, still back under the channel. Trading the Bovespa. I was on the floor in my earlier career, both the trading floor and on the floor as well. I've been on both floors. So they're selling into Ferrari on the opening. Everyone doing okay? Quiet day. Yes. Definitely a pro. There goes gold on its way to 1150. Anyone get short gold on that call? 1150 coming. My profile on what? So gold pulling back, looks like 1150 is going to be a magnet in the gold. It's 1150, maybe 1140 range. As the S&Ps blow off to the upside, gold pulls back. Stand by for Pete in about 20 minutes. Hi, Richard. How are you doing? John, how are you? Lewis, 12. What do you think? Famous. I'm a legend in my own mind. Abel, how are you? Slave, change your handle. Hi, Shuai, how are you? I set you free, slave. Okay, John, there was another John in here too. No, John 573. Okay. Why not be the master? Don't be a slave. What are you having for lunch, Abel? I'm hungry. Can you Skype me over a sandwich, buddy? I'm hungry. So people, I hope that we never give you indigestion. You want to change your name, huh? You like that suggestion? I don't know how. You'll have to ask Mauricio. So you're going to change your handle to master? You're a master of the markets rather than a slave. Don't be a slave to anything. Even God doesn't ask you to be a slave. Oh, good one, Abel. There you go. Oh, you healthy guy. Thank you, Mauricio. Yeah, it looks like they want to take these stops out here. Doesn't it? Right here on a 50-day moving average. It does look critical, Ellie. Okay. Maybe you will. The point I'm trying to make is sometimes you have to say you're something to become it before you become it. So you step out in faith and say you're a master. Right? Because what you say about yourself manifests. That's your paradigm. Now, veterans brought up that 43.5 level for a while. So that'll take all the stops out under 4380. So it's important what you say about yourself, right? If you say you're a slave, you're prophesizing about your future. Yeah. Veteran's good. That's where it's going. Yeah. I'm hungry. There you go. There you go. Napoleon Hill. Read that book. Whatever you say after I am is what you will become. I am. Canada making a push to new highs here. I will break. I would drop her. Get rid of her. Yeah, it sure does. Time to move on, buddy. If she's jealous of your time. Yeah, but I think we could go to 112 first. We could go to 112 first. Nice short in the Dow, Khalid, for the crude. Thank you, Clever. Okay. In the meantime, Khalid is DKDX making money shorting that pop in crude. So this is what I think, Mauricio. Down to here first. Possibly you're wrong under 1080, under 111. So 112, 111.80, and that scenario is off under 110. Yeah, that's what I'm thinking. And faded. Yeah, this is a nice chart. Yeah, I like it. So we pull back to 112 here and then go again. Confluence of 120. I like that chart, Mauricio. Everyone thank Mauricio for finding this chart. What is it, a weekly? Or daily? It's a daily. Thank you, Mauricio. Nice technical contribution by our producer. Everyone thank Mauricio for that look at the euro. Nice find. So I also have some lines coming in. I have the wedge line right here. I have confluence out here. Around 112. Congratulations, Khalid. Nice trade. Everyone congratulate Khalid on his Dow short. Nice scalp. Everyone congratulate Khalid on his Dow scalp. Nice trade, buddy. All right, we have Pete Souris in 11 minutes. Stand by for our interview. Pete's a pretty high energy guy. I think you guys are going to enjoy hearing it from him. The Gambler won. You got to know when to hold them, know when to fold them, know when to walk away, know when to run. You never count your pips when you're sitting at your desktop. There'll be time enough for counting when the market's closed. Everybody now, you got to know when to hold them, know when to fold them, know when to walk away, know when to run. You better count your pips. Yep, we were on top of CAD yesterday, Shuai. Looking for over 131 again. Here we go. So the CAD pairs should be okay till about 31.25 to 32. 31.25 to 31.80. I'd be out of all long CAD pairs up there based on what I've seen in USD CAD. I do, Slave. I'm looking for 70 and 71 in EG. Based on the weekly, I've been talking about it for a while. Looking for 70, that perhaps we're going to build a head and shoulders, looking for a right shoulder down here. That's my opinion. Right now, it's quite oversold, but breaking down out of its channel, not able to close in it. Hope that helps. That's my EG view. I think we're going to 70.50. How about 70.50, Slave? Hi, Happy. I'll show you after our interview, Happy. You're welcome. So Val's going to join us for a minute. Getting back to USD CAD, it's because of this 200-day. I have some fib retracements. How about because of fibs? Halfway back's 31.42. Does that help you? Does that help you? Okay. So I guess Val is going to join us for a few minutes. So we're going to have a double header interview here. Everyone doing okay? Does that help you, Happy? Does that help you? In what pair, Clever? 3052 in Canada? Okay. For a scalp? Okay. You're welcome. Glad to serve. Okay, stand by for Pete in 4 minutes. Stand by for Pete. Okay, sometimes I don't understand what you guys are trying to say in your texts. Okay. Thank you, Happy. Stand by for our interview. Yeah, it's fine. Sure. Anyway, I'm good friends with Adam Button anyway, and Greg. I'm good friends with Adam and Greg, so you could promote them all you'd like, Happy. We have no competition here. No one does what we do. We're not competing with anyone because we have no competition. Yeah, it's perfectly fine. Stand by for our interview with Pete Souris. Should be with us here in a little bit. Hello, everybody watching us on the home page. My name's Dale Pinkert. I'm the anchor of FX3's Live Analysis Room. I'm going to be interviewing Pete Souris. It's a return interview from Pete. He was very well received last time. His Twitter handle is @4xshrink. So if you have psychiatric issues, this would be a good interview for you guys. Be a good interview for you guys to catch up on. If you're not familiar with what we do in LAR, we show a lot of screenshots. We communicate with pictures. There's an example. Happy Pips just sent this to us, just so you guys can see what we do here. A screenshot up here. Now you guys can see. Let me get this out of here. So we share our screenshots here. just so you guys could see what we do. We communicate through pictures. I think you'll like the fee. It's a free room with invaluable looks and analysis by our community, where we have a mastermind. So here's a look on USD CAD 4 hour by Happy Pips, looking for about 3180. Yeah, that would be close to the 50% retrace level. Happy, thank you for the look. Yeah. Okay. Just standing by for Pete now. Planet, how are you? Alien loves Forex Shrink. So stand by for Pete. Should be with us in a few minutes. Planet's got a look. What do you got, Planet? Planet showing a live trade right here. US dollar yen. He's starting to get short up here in US dollar yen. Okay, I concur. Here's drive 1, here's drive 2. I think we're going to get another break. I was waiting for the S&Ps to top out. Not sure if we're there yet. Time-wise we are, I'm just not sure price-wise. Everyone thank Planet for his look at US dollar yen. Thank you, Planet. Fame likes Forex Shrink too. Planet made a nice call yesterday. Jax is acknowledging Planet got short the pound yesterday. How many good traders do you guys think we have here in LAR? What's your guess? Jax is a top gun. Thank you, Jax. Pete should be with us any moment now. Stand by for Pete Souris at Forex Shrink. Congratulations, Planet. Planet's a pioneer. He's been here a long time with us. You're a pioneer. Did you know that, Planet? How long have you been coming into LAR, Planet? 2 years? So stand by for Pete Souris. S&P's now a shade lower here. What's that mean, Alien? Yeah. The law of attraction in action. The law of attraction in action, Happy. Yeah, want to see what it does above it. But don't fade Planet, Jax. I don't like to be on the other side of the market of Planet. It's one of the ways I use LAR, by watching what you guys are doing. And people I don't like to be on the other side of. You're very welcome. Stand by for our interview. How many good technicians, analysts do you think we have in the room here? Yeah, there you go. So you're a pioneer. That's the law of attraction in action. If anyone communicates with Armand, tell him Dale says hi. Ricardo, I think, is taking a break. I'm sure he'll be back. Khalid, I'll show that Well, while we're waiting for Pete, I'll show it. Khalid, is this your Dow trade? Khalid's turned into a very good trader, technician. Crude. He's looking to short it up here. So you're looking for a bounce and then down here. Nice look in the crude. Thank you, Khalid. Everyone thank Khalid for his crude look. Not that he looks crude, but his technical view of the oil market. Everyone thank Khalid. Yes, I'm hungry. I am hungry. I really am starving, actually. Yeah, some great charts throughout our session. Aliens upped his targets to 3180 in USD CAD. Maybe 31 and a half. Thank you, Alien. Where's Pete? Thank you, guys. Okay.
Hello.
Hey, Pete, how are you?
Dale, how you doing?
Okay, I'm having a hard time hearing you.
Can you hear me?
That's a little better.
All right, let me get here a little closer.
I'll turn up my volume too. So,
I apologize, I wasn't too familiar with the Google Plus Hangout type thing, so
that's
tough
okay.
last minute for me.
I would figure a millennial would have mastered everything in the 21st century technical universe, but you know, Mauricio had to drag me kicking and screaming into this century. So great to have you back, Pete. You were very well received.
Great to be here.
Yeah, on your first visit with us, and I know you do a lot of short-term stuff.
Of course.
You're a little bit too close to your camera, is what my producer is saying. There you go. Back up a little bit. So what do you see? What do you see happening in these markets, Pete? We have the ECB tomorrow. Since you and I talked, we had the at least the risk of China turning into something systemic. The Fed continues to cancel any type of lift off on rate. Where's your head at in this market environment, and what are you focused on for the days ahead?
Yeah, of course. So I think I'm going to touch up a lot on what we talked about last time, but I believe last time we talked more about the psychology of the trader as opposed to the psychology of how I transact in the markets. And one of the best decisions I made as a trader is to understand that a market is 80% range bound. We already know this as traders and individuals. So I feel that a lot of people try to establish trend trading systems. A lot of individuals try to analyze fundamentals, and I'm not going to necessarily say that I ignore those, but in my daily trading, my goal is to be a transactor, and we talked about this in the past, and today I'm going to share quite a bit of how I go about this. So what we know...
that's an interesting point, Pete, because I've been told by, you know, guys that I respect their work, you know, that all the action in FX is corrective. And this guy's an E-waiver. So you would think he'd be talking about impulsive, that there are trends, but because of the battle going on between central banks, most FX action is corrective of some degree.
It's a fact that the market is efficient, and just doing back studies, and we're going to take a look at this in some of my examples, is that the way that a order comes into the market is what creates the spikes out of consolidation that, as average retail traders, the general public is trying to chase. So what we have to understand is the amount of volume that comes into a market, and that became very apparent to me when I started looking at institutional feeds. And from a retail side, you can't see it because you can get liquidity at any time in a retail position if you're trading up to $5 per position. But when you try getting on the institutional level during hours where there is not liquidity because books aren't open, you're going to see 20 pip spreads across pairs that you would normally see on a retail fee that's a 2 pip spread, let's say. So this really got my mind thinking, because I felt that from a retail platform we were missing the bigger picture of liquidity, and liquidity is what creates movements. Now, price's function is to search for liquidity. Price is only trying to fill the orders that are coming into the market, and these aren't market orders that are coming in from the guy trading one standard lots. We're talking about 300 million lot positions coming in and so on. So that's where I feel people need to understand that it is more important on a daily basis to transact in the market at a highly efficient level. Just as price is highly efficient, so can you be as a trader. So what I mean by that is, a lot of people consider spikes to be fake outs and deal runs, which they could be, but when you look at the anatomy of the price, you're going to find out exactly what is happening, because essentially, if we're in a consolidation period and we see a large movement out of it, there is some type of order coming into that. Now, if that's a 100 million block order coming in from an institution and there's only 1 to 5 liquidity coming into the market's going to jump out of that consolidation, run until it finds offers to fill that bid. Once that bid is complete, there's not going to be many price chasing mechanisms there to chase the price to fulfill the bid. So you're going to see what is pretty much a parabolic move, and that's what you see me talking about all the time, is parabolic moves back into efficiency. And essentially what you can do is you could trade it both ways. You can trade the reversal of a parabolic spike, knowing that it's going to come back into the range, it's going to come back into the volume base of the market, and from there, then if you have time of day, if you have sentiment in the market, because remember, the market is not always in sentiment. It is in sentiment probably 10% of the time, if even. And from there on, you can get a continuation trade off of the base. So I feel that every single retail trader I talk to, 90% of the time, they will enter a trade, and within 1 to 2 minutes, they're 15 pips, 20 pips behind their entry. And that is because they're chasing price. Well, if you understand how the mechanisms of order delivery work into the market, you will never chase price again. You will always look for pullbacks to the volume base where price came out of, because that is where interest can be filled.
Okay, so would a good example be, Pete, the NFP number was surprisingly negative at the last report, and Euro spiked, I don't know, 100 pips or so within a millisecond. And then within a period of time, we did get a reversion back to the mean.
Of course, and by the end of the day, we got back into that. And, that brings up a great point, Bill, because fundamentals I handle totally different. The spikes that occur out of fundamentals, from my research and from my understanding, and that's the number one thing that I would like for people to get out of this, so to say, interview, is that you have to take it upon yourself to create an understanding that you believe in, and that belief can't come from me or you or anybody. It has to come from research, and it has to come from repetition of watching things occur. So when I see fundamentals occur, what I believe is happening is that you have a core base of liquidity, you have a consolidation channel, and then 1 minute, 2 minutes before that NFP or whatever significant release it's going to be, standing liquidity is moving away from the market because they're smart and they don't want to get whipsawed, entered into a movement. So at that point that NFP comes out, it only takes a small order because there's no standing orders around the price to create a spike. And again, it goes back to the core of what I said initially, is that price's only job, let's put it, is to find and fill the orders that are currently in the market. So if pre-NFP, if there's nobody with a sizable position within 50 to 100 pips up or down of the current market price, if that number comes out good, and there's one institution that says, you know what, and we all know that there are institutions that take a lot more risk than they're supposed to. We read about this all the time, rogue trading and whatnot. And they will say, hey, instead of sitting on my feet, the number came out, I'm going to take a position on this. And that's what creates the spike. But just because spikes are coming into the market doesn't mean that that institution is going to be able to have the liquidity to exit that position for the profit that you're seeing. And that is where the market is then correcting itself. And those are the self-correcting mechanisms of the Forex market that are coming in from the banks that are creating this market.
So, Pete, how do you monitor this? How did you know there were no bids, no offers by institutions pre-NFP, that it was a market with no liquidity going into a number
Right.
like that? Do you have a platform that you can see these things on?
Nobody does. Nobody, not even the biggest institutions in the world do. It comes from an understanding of psychology of what I used to do as a retail trader. What I used to do, let's say 5 years ago, is I would see that pre-news we're going to have a spike. So people would trap the market, right? But you would want to trap the market, let's say 20 pips on either side, so that if you get in, your order is not going to come out. But then we would see the whipsaw coming in. So over time, through research and through just kind of seeing the bigger picture, just thinking about what is happening.
All right, so you can't learn experience. You have to live through that to get it.
That's it. That's 100%. 100%. And that's where you have to, that's where I could sit here and show you everything I know, but that doesn't mean that you're going to understand it, because the only way you can understand something is if you create an internal understanding of what you are trying to accomplish. So I would like to, if I could, just show some examples here of exactly what I'm talking about.
Okay, so the screen here is in the upper left-hand corner. It's a green box with an arrow.
Gotcha. All right. So let's
and then it'll show the different screens, and you select what you want to show.
All right. So let's just, might as well, since we're in here, just take a look
at. Okay, got you.
Let's just take a look at what I was talking about yesterday. Is the sound okay? Can you still hear me good?
Yeah, everything's good.
Perfect. So this is one great example right here on the Audi USD, and it's not a pair that I talk a lot about, but it's a pair that I honestly love because it has smaller, precise movements in terms of, let's take a look here, what happened on Monday. So obviously we come in here Sunday, and just taking a look here, what creates this spike, and this is all in the Asian session, so it doesn't even matter, and I don't start getting interested until the 3 o'clock hour. So we can see right here, this is where my mouse is right now. This is about 3 a.m. London Open, right? So from the psychology of a trader, what I can see here is that a spike occurs, right? And then after the spike occurs, what I can see is that I have a volume base here, and I believe that if I were to poll the audience live here, what we would see is that individuals are going to look for an opportunity to go long on this pair, because psychology has people afraid that they're going to miss that ride to the moon. And this is where we've talked about in the past that there's no elevator that goes up to the clouds. Every elevator stops at some point. So what goes up must come down. And that's why I say that I've become a transactor instead of a trend trader looking for longer moves. So basically, what I'm looking for is for psychology to overlap with technicals. So right here, Audi USD, we're sitting at a big fig, 73.04. So I bet a lot of breakout traders, because I used to be there, we're saying, okay, I'm gonna be the smartest guy in the world. I'm gonna sit on the beach and I'm gonna put a buy limit above 7,300, above the big figure. If it goes up to 73.10, I'm in. Here to say we get a 73.6. A lot of people are afraid they're going to miss this move because they see the price action in here. But what they do not realize is how inefficient these legs are right here. Okay, now these legs here are coming in the Asian session when the books are first opening. So these are the true deal runs, and only by wrapping your mind around everything being the time of day, the price structure, and where the market currently stands and where it can go to pick up transactions. Because remember, banks aren't necessarily sitting here and trading. What they are doing is they're offering a bid and an offer looking to make the difference in the spread so they avoid risk at many levels. And yes, there are times where they can stack orders if they have an overall fundamental view, but that's not necessarily the case. So what we look for is for a parabolic spike into a predetermined level that we have interest in, and we can see that is exactly what happens here at 4 a.m. in the 3:55 in the morning. Okay, so we know London's kicked in for 55 minutes. So what we get here is a 20 pip spike up. We come right back. Now notice how this level here is inefficient. So is this. So we come back into it. We trade.
Why is it inefficient?
It is inefficient because there's no liquidity in the market at this point, and it doesn't take much.
So can you say that about Asia almost every day?
Yes, yes.
Okay, got it.
Unless Dale, the market is in a mode such as a Wednesday or a Thursday where there's so many orders in the market that they can't, there's standing orders in the market that it's not worth it for them to make a deal run and even put the risk on for that to occur. But we will get into further examples here that will show exactly what is happening.
How do you define a deal run?
The time of day, number one. So again here, Asian session, it's coming into Frankfurt, opening up its books. It's where my mouse is. It's 2:25 a.m. Eastern Standard Time is what I'm referencing here. Okay. So again, when we're sitting at this point here, I don't think that me, you, or anybody is interested in buying into this. It makes no sense, but what makes sense to me is that the market wants to achieve a level where it's going to pick up transactions on the bid and offer so that it can pick up both sides and deal them to me and you and make that pip transaction, that 2 pip transaction, including, on the institution side, we're usually paying just a commission to get into trades plus a small pip spread. So it's a commission-based game for the banks and the market makers. And yes, once in a while they will get in, they will place risk, but what people have to realize is we talk about it's a $4 trillion industry. So if it's a $4 trillion industry, imagine if you as a banker dealer can get a piece of that pie and get risk-free commissions off of those mass amounts of transactions that are coming in. So that is why they're called banker dealers, and that's why there are market makers, because market makers a lot of time are under the perception that 95% of the retail market is going to lose, so why wouldn't they take the opposite side of the trade, because you're going to lose your money anyway, and they're also making the commission on the spread.
Okay, so, I have a question from the community, someone who's a big fan of you, Alien Ovicho, who's a great trader in his own right, said, could you please ask Pete about his parabolic reversal? Give us an example if possible.
Yes, of course. Let me pull up.
You have fans. Alien would like an 8x10 autograph glossy picture of you to hang up over his screen.
Sounds like a plan. Let's see.
All right.
Yep. Give me just 1 second. All right. Before we show this guy, let me just remember that. Let me get this one because I believe, yes. All right. So this is my life story right here, and I know many have heard me mention the A trade, the support up, support down trade. And what I want everyone to understand before I share this is the psychology behind it. You cannot simply go in and look at 4 a.m. in the morning and look for the A trade to occur, such as this, or for support up, support down to occur. What you have to do is look at everything together in terms of starting from a volume base down here. Okay, so we can see at this point, I want to say this is about 14, so this is about New York session here. So we can see that the market just is in its consolidation. We have an overnight price run out of it. This is nothing that we're interested in trading in, but what we're interested in trading is the spike, the inefficient spike. Now notice how inefficient this is. So what this is here, in my opinion, at this point, this is a deal run. This is initiated here. This initial movement is initiated by some type of market dealer, some institution that just needs to get transactions so they can make commissions. So at times, because they know the human psychology of panic, where we chase price, and that is where we get a panic updraft that comes into price that we can see that is created by the retail side. Now, what we always look for in the market is a retest of a spike. So we have a dry run right here, okay, at the top, and we're sitting now here at 10 o'clock. We're 4 hours behind the GMT here, so this is 10:30 in the morning once again, New York. So I apologize. This was definitely here in the so 1 minute chart here. So stick with it, and we'll get through it. So here we're at 10:48, where my mouse is. And over here, we're actually coming into 16, so we have 12:30, okay? So we can see that London close is playing a big part in this trade, okay? So what we have to understand is at London close, there are going to be institutions, traders that are exiting positions because we want to book profits. And that is where I wrap my head around transacting. I cannot stay in a market overnight anymore, no matter how good it looks, because I can't control it because I know how the books run. So nonetheless, we come in here, and this dry spike is created because for me to get out of a large buy, it's not necessarily, if you think about this for a second, if I want to get into a buy, I don't necessarily have to close it and sell it. It's considered a retail flip, and this is something that my brain thinks is true, and I can't confirm this, but I believe that if I'm an institution and I have created all the profit from here, if I can get the retail market to believe that this market is going higher, and that's the fear of missing the biggest move in the world, then I'm going to transfer my buy to you in terms of a buy to a buy without gaining a spread, but I'm able to absorb all the profits that I wouldn't be able to find because there's not liquidity of people looking for a sell on this position. So this is where we get into a London close A trade, because what we can see here is that inefficient market, so we spike up, and we can see a perfect triangle formed in here, okay? And what is happening is the A trade is going off of price reacts off of the risk, and again, flip side, if this is a movement down, it works exactly the same. So price at the shock and awe period, which I call it right here, price loves to use this point to overlap and create an A figure. Now, it's not only the A figure. What price is doing is it's saying, okay, we're going down. Now, a lot of people are seeing this last support, so a lot of the retail market is buying into it. Okay, and here we have an efficient level. We have no more fear in the market of sellers, so we get the overwhelming sell. And then what we create is support up in the market, support down, because this is support of the parabolic spike. This is support of the parabolic spike to the downside, so hence the support coming up, support coming down. And then we bounce once again back into the A trade, because this is where we're going to find liquidity. Again, just because here we have everyone selling, it doesn't mean that the market can instantly go down, because if there's not liquidity there, it's going to have to travel, because again, price's only function is to find liquidity for what the market is demanding, is going to have to travel down. Okay, so we get a spike up into liquidity, and what surprised me on this one is that we didn't see efficiency back into this level. Now, what I would have liked to see, but this becomes a part of understanding. If this was 10:30 in the morning US, we would have seen the market come back up into this level because there would have been more volume to the market. But in a less voluminous market, they do not have to create full efficiency. But you better believe that the market did come back and fill this efficiency. And it's all relative to the time frame. Okay, so you can't just jump on a 1 minute chart and start doing this. What you have to do is you have to start getting Gripping your mind around looking at your hourly chart for inefficient levels, just as you look at it here on the 1 minute. So this is replicated, this figure here is replicated on a 1 hour chart all the time. And that's, again, because the market 80% of the time is range bound. So yes, we will get those 20% breakouts like this, but on every single level of compressions, even if you take it to the daily, please do the work and see how efficient this market is. And by efficient, what I mean is that when we have movements that are not sustainable, they will come back and correct price and create a volume base of interest. And you can see that happening here. And this is a great example of what I look for in every single transaction I take, being the A trade, the support up, support down trade. And then here what we can see is the best of all. This is just the cherry on top, as I call it, and it's a gap slip, because this is the initial gap that we have coming out of this movement, which again, remember, if this is the most efficient market in the world, it makes sense that if it gets taken on volume, which it gets taken here on volume, it is going to want to correct that at some point. It may be within an hour, it may be within a day, it may be within 2 days. But that is what you understand when you wrap around the whole sentiment of the market. And especially days as yesterday and days as Monday, where there's no fundamental drivers coming into the market. You see spikes, and again, the market is making deal runs so they can accumulate transactions and pick up the profit on the commissions. We'll take a look at live ones here in a little bit. So what we can see is, once we get into that volume base, price is just searching because it's a lost puppy. It has nowhere to go. There are no orders in that. What it was simply doing is coming back to this range that we have within here. And this is a range of 30 pips, and that's what the euro loves to do. So let's just continue on. Okay, so here's another 1 minute example. This is the pound dollar this time. So we can see here, okay, time of day, 5:08 Eastern Standard Time. Now, this run here could be created by simply one order coming into this market, because at this point right here, think how many transactions are coming in. Okay, so the market is going to want to go to the area that has less standing orders, or the area that in this dealing base here, in my anticipation coming out of a sell, okay, we go into consolidation. So I believe that the retail market on this opportunity here is accumulating sells. So if the market just lets it sit for a little bit, think of all the liquidity here that an institution can just come in and sweep up in one clip. And that's where we see the mechanism of price coming in, and we see these spikes out of it. And just imagine right here at this point how many retail stops, because if you're shorting at this level here, your stop, I guaranteed, is going to be a couple pips up above here. So what we do is we pick up further liquidity in this market. These banks, these institutions know it, because this happens every single day across all the pairs, because it is simply how the markets are dealt. Okay, so we come back into that, and this is where you will see over and over again that the market will spike out, come back to the previous area of deal flow. From there, this is what I consider the price chasers. And then this, coming back once again into the level of efficiency, we see that there is a deal run of those who are afraid that they're going to miss the biggest movement in the world. And then from that, we can see that we're coming into 6:20 in the morning. I consider that to be the London lunch hour. And from there, what we can see that there is no more interest in driving up this pair, because institutions, banks, large traders know that what goes up must come down. And that is where we need to step in as the small guy, and we need to understand how the A trade plays into the support up, support down, look for the breaks of those, and trade it back to parabolic efficiency. And this area right here is going to be dealt with once again at a time where the retail market will be coming in. This is right here, 8 o'clock Eastern Standard Time, 8:05 to be exact. So just imagine the injection of the injection of bids that came into this, and then think about this for 1 second. If I bid this up and I put massive bids and that price has to attack to find the offers, which creates the movement, and then we pull back, and then we have the retail market coming bidding, and then we pull back, and then they bid it. Now, if I'm an institution and I'm London-based and it's 6:20 in the morning and I'm up 50, 60, whatever pips I am on my position on the institution side, what I'm going to do is start offering liquidity to the market on the offers. So
they drive it up to earn lunch money. And then after lunch, they have a little indigestion and they take it back down so they could pay the tip.
I really think that that's the way to put it to someone who hasn't taken, a year or whatnot to really understand it, and it's liquidity is if you can understand liquidity, you can understand why this happens. And again, for me to be able to get a 10 million position, there has to, on a buy, to bid it up, there has to be an offer of 10 million that I can get, or else price is going to jump out. So if I'm an institution and I'm trading that larger positions, my manager is not going to be too happy if I get filled here when I was looking to get filled here. So that is why they trade out of these volume bases. Does that kind of put a bigger picture on that?
You know what, Pete? You're a modern day 21st century tape reader. So our grandfathers used to sit there and look at the volume on initially a ticker tape, and then a screen, and just read what's happening on the buy and sell side. And you basically have taken it into the new century, being a tape reader in FX.
Well, so essentially, and I think what happened is that there's many things that evolved into me getting this type of structure in my trading. And this is my intraday trading model. It's totally discretionary upon myself, but what I'm saying is that I've tried the fundamental analysis, but as a trader, to simply trade fundamental analysis from the retail side and to follow the proper risk reward management that's going to keep you sane as a trader, you have to have a decent bank account. Now, I believe that 80-90% of retail traders that are coming in, they're sick of their 9-to-5 job. They probably have 1 to 5K that they can throw into an account. And these are things that the market knows. The market is very aware of this. I shouldn't say the market, the institutions, because the market is the banks that has price defending mechanisms, because again, they are interested in the bid and offer spread creating the transaction. Market makers are interested in driving to price so that they can hit these transactions. So you can just clearly see this happening on the Audi USD. Okay, and one tool that I do use is the Fibonacci, because we all know that the 161.8 is very respected. But I don't simply throw on the 1618 and say, oh, it's going there. What I see here when I threw on this 1618 of my initial movement, and I'm always looking for initial movements that make sense. So this happened on Monday. We're coming into a big figure level. Okay, we're dealing at 4:30 in the morning. So in my mind, once again, we have trapped the market. And that's what market makers want to do. They want to trap the market because they want people to be on the buy side and they want people to come in on the sell side so they could just sell that as a dealer and make the commission. Okay, and here you can see the level of efficiency that is created in the market. So we have a parabolic spike, and then we come into this last inefficient level. So just notice how this candle right here, okay, just comes down and runs, 10 pips, and then we consolidate. Well, the market knows that that is an inefficient level, and it knows that if it wants to pick up liquidity, it has to go to the last area of efficiency, and that is where we come right into this place here called the 61.8 that the retail market looks at it, which is a beautiful thing to start understanding. And the reason why we use the fib zones, especially deeper fib zones with the 618, the 786, and the 886, is not because they work because they're magical numbers. They will work if you have a level of inefficiency at that level. Okay, so if I had a spike here that was straight up, and it was my last point of efficiency of the blunt candle was here at a 886, you better believe that that market is going to achieve that 886 before it continues. Okay, so
the beauty. Pete, we're at the time zone right now where people that are listening to you right now,
Mm-hmm.
I'm sure, are interested in how they might be able to follow you, become
Yeah,
involved with
of
you. So
course. So
why don't you
the
go
only
ahead?
interest I'll get into that because the only trade that I'm looking at currently is the pound dollar. And one thing that I've learned is not to force trades. So, anyways, I just want to show this because this is very important to realize that
Okay.
this was Monday. Okay, so we came back to core liquidity right here. Now take a look. This is core liquidity from that. This inefficient level was filled on this movement. Now, what is amazing is that we still right here, just as this was inefficient, so is this area right here. This is inefficient. There's no dealing taking place in this. This is simply the market coming back to its home base of core liquidity. So what we can see that occurs is that the dealers know this and they bring it back up to this level. Okay, so now we're into Tuesday. Okay, so look what we have happen at this level. Let me just extend this across. Okay, so this is our last level of true demand in the market that is inefficient. Okay, so what do we have happen yesterday?
Look
And
at
this
that.
is where I say that we have to understand that the market is range bound 80% of the time. So we have it come back into that exact area and it repeats the whole process of an A trade, of an support up, support down trade. And this is something that we need to research is the methodical breakdown of price once it is reversing. You can see that it doesn't just go straight down. We have a deal flow down, inefficiency, so the market comes and fills that, a deal flow down, okay? And this is possibly where you need to start understanding the time frames of the day. And we can see here, this is 10 in the morning. So 10:30 a.m. Eastern Standard Time is a big time of reversals in terms of a movement up, getting the retail market thinking that this thing's going to the sky, and that is where the liquidity is going to come in. Because if you're buying, and I'm an institution, I'm waiting to bid, or excuse me, for a sell, I can get my liquidity off of all of the retail's buys. So then we travel simply down. And yesterday, what I was posting on Twitter is essentially the initial movement out of this, and we can see that we nailed that 161.8. Now, once I saw this movement coming in later, my interest was struck, and what you can see is how precise these Fibonacci's are when you locate the actual initial movement. Okay, and we can see that overnight, what the market did was fulfilled 161.8. So again, what you were looking for, in my perspective, the best place to start is literally on a 5-minute chart. Take a look at the deal runs that occur at 3 a.m. London, Eastern Standard Time. See where the market is by 4 o'clock. Have they created a trap in the market? And by traps in the market, take a note at this, and people realize that you will always see movements on the retest that will come within 2 to 6 pips. And why? Because think of, at this point here in the market, what is happening? Here we have sellers being stopped out because everyone is putting their stops below, and we also have buy stops coming in above price because continuation. So at this point, the liquidity is dried, and that's why we see a sharp reversal. But what happens there is that market makers are pocketing all of the stop outs. You are handing them your money. And that is by having the psychology of an independent thinker, you can understand what you're actually looking at. So, in my opinion, the best thing to do is just grind out price. Grind out price and realize every time a large movement comes that it is going to come back to some degree of efficiency. And you can even see it right here. Market runs up and it comes back to its last degree of efficiency where there was dealing that occurred. This is somewhat efficient in its terms. Okay, so let's just take a look at the pound here.
Okay.
Just wanted to
Go ahead.
so all the analysis that I do at this time is going to be on 5-minute charts, okay? And that doesn't mean that I'm neglecting what's going on larger time frames. So what we can see here, let's just take this to a 4-hour and kind of show the average type of technical analysis, right? Supply and demand lines, in my opinion, the Fibonacci's and whatnot, support and resistance. So what we can see here on this 4-hour is a very evident point of supply in the market. You know, we're coming back here from this August price level, perfect respect down in here. There's a lot going on, so we can't really see it. So let's just note and start getting into this. Okay. So let me just see if we can get a better picture on the 30. I apologize, but when you get to the point where you're stalking a currency pair, and we talked about this in the past, you will start to see that you don't even need any of this on there. So nonetheless, what is interesting is that yesterday we took this short down, and the reason that we took this short down is that we had those setups that we're looking for. I'll get back to the larger compression, but we can see that here we had a 230 deal spike, okay, and that, again, there was nothing happened in the market yesterday at 2:30 in the morning Eastern Standard Time to see the pound run 37 pips. But take a look what's right here, the 155.00 handle. So liquidity pools are going to be standing at this because liquidity pools are created by institutions that need to get in for the transactional opportunity. And you better believe that liquidity pools control this market in terms of larger picture. So when you are trading the market and you're looking for reversals, and they're not necessarily reversals because this was, again, on the 4-hour time frame, we were looking for a continuation to the downside, correct? So what we have to understand is that if the market just turned on that supply line, the whole world would be paved with gold because everyone would be able to get in and trade that. It's not that simple. So you have to take it upon yourself to create an intimate understanding of what they are trying to do so that they can take our money and pay themselves. Because if there is not a loser, there's not going to be a winner. So we have a deal spike on a 5-minute chart. So here within 20 minutes, they get up 35 pips. And then we create parabolic movement right here. And this only takes a matter of an hour and 10 minutes. So here at 4 a.m. London, we're sitting. And what is now happening? Now everyone is saying that, hey, oh no, I missed this movement. I got to get in. It's London. I see what they did. They did a deal run, and they're coming. That's stop run as people want to see it. But again, they don't realize that this is standing liquidity here in the market. We get the movement down. This movement is highly inefficient. And when we see reversals taking place, but please don't take it as a reversal in terms of sentiment. Take it in terms as a reversal in price action. We know that price is going to methodically break down, or else it's not worth our time to get interested in that. And you know what? You may see 2 out of 10. You may see 3, 4 out of 10 that just simply break down and you don't have the opportunity. But that's where you have to be precise in your entries. So we get a retest of the market coming back into core efficiency, and then we start seeing nice dealing. So we go down, we come up. We go down, we come up. We go down, we leave an area of inefficiency. We are dealing within here, creating a mine sore for the entire world, spike into that inefficient level, and then we see finally at 10:15, hence what I said earlier, 10:15, or excuse me, 10:30 is a big dealing time. We see the market come down, and this right here was my entry from yesterday. And this, in my terms, is what I call the flip of flows. Okay, so you can see that I had a shift of flows here, but I wanted to see what 10:30 was going to bring into the market. So I could see that right at this time, 10:15, 10:20, 10:30, my entry candle, I get a spike up to it, and from there I'm short because my risk is very limited, and I'm not going to say that I put it up above. My risk is going to be right here because if that market goes up above, I want out. I want out for 10 points. I want out for 15 because I know to the downside that I have at least 30 pips of potential profit in my bank. Okay, so currently what I'm looking at here on the pound is what happened overnight. Okay, so we saw the market achieve its range of 94, 95 pips overnight, okay, into a deal run, whatever you want to call it. And take a look at that time. It's 2:30 in the morning Eastern Standard Time. If I can give you one piece of advice, it is understand timestamps. Once you understand timestamps, understand liquidity pools, and once you understand liquidity pools, understand how this is the most efficient market in the world, and that gaps that are created will be filled, and then overlap that with an average daily range, because don't just pick a number and say this is my average daily range, right? There are tools out there that allow you to backtest and say what my 10-week average daily range is. Mataf.net is a great site that I use all the time just to quickly see the difference between a 10-week average daily range and a 4-week average daily range, and even a 2-week average daily range, and realize that
tool, Pete. What's that tool again?
It is it's the volatility calculator on mataf.net. It's a free tool. I've been using that site for years. I think it may be called Forex Ticket now, but when I go mataf.net, it just clicks it right in for me.
All right, thank you.
Yep.
Great presentation, Pete.
Yeah.
Thank you so much for joining us today.
No problem. No problem.
The theme is be a transactor.
Yes, yes. And just one more second here because I want to finish up what I was looking for today, and you'll be able to see what happened. So this area of inefficiency, okay, we can see that the market came overnight into it. But what happened at this level? My average daily range was fulfilled. My 161.8 and 161.8 expansions work because when banks and institutions initiate and bank their money here on the initial movement, because they are the only ones that can create the initial movement, what they need to know is a target point that they can take for it. Okay, so again, we inefficient market. And this isn't a parabolic spike, and this is where you know that a reversal is coming in here today, and that's where you know you can come back into this market and take a transaction for some pips, is you get a deal run off, but we didn't just spike back into it. There is dealing coming in. Look how efficient this market dealt to as opposed to this market right here. Okay, so we get market right here. We're sitting at 5 a.m. We get a spike, consolidation. Okay, so the trade that I was looking for today was I wanted at the 10:30 hour, I wanted the market to come back here to the 154.30 level. And if we did, I was going to chase inefficiencies that were left in this market right here. And note, that's why I said yesterday I exited my trade early because of the inefficiency. And simply, you have to understand that it may not be to your basic eye a big inefficiency right there, but to the trained eye, you understand that this is where the market must go in terms of liquidity, okay? Because there will be standing liquidity once again at this area. Now, this is what occurred today. We can see that market came right, fooled its efficiency, and what we're doing right now is we are driving right up into that. And this is where you can start to develop a mentality to see the flows. And these flows come in forms of triangles that you can see right here, okay? So triangle there, okay? And then overall what we're creating is, is a efficient level of dealing throughout the market. And it's not a trend line, it's efficiency. You see that? How the market always fills itself. So this is if I can give one piece of advice, it's this. If you're interested in buying at this point, wait for a deal spike to occur. If it goes to the moon, who cares? Wait for it to consolidate. Wait for it to come back at a perfect time of day. Perfect time of day being anytime after the 8:30 hour if you're trading New York, right? 8:30, be aware, that's where you have to look for stop hunts to occur. And it's possible because there's not a lot of liquidity in that market at that time. Okay, so at this point here, you would say, I am a buyer because we have fulfillment of yesterday's average daily range. We created efficiency, and now we have left an inefficient level up here. Well, don't take this lightly, my friend, because this to this is 40 pips. Now, last piece of pie, if you can make 40 pips daily in this market and focus on building your account size, stop chasing pips, start transacting, perfect 30 pips. If it goes 100 pips, who cares? Take your 30 pips and pat yourself on the back. Take what we call the center of the melon and leave the top and bottom for the rest who haven't yet figured it out. It's a painful occupation, but once you get the intelligence behind it and understand the anatomy of the market, you will see how rewarding it can be. And, that's all I can say.
All right, Pete. Yeah, you're as everyone could tell, you're very passionate about teaching people about this method. So I encourage people to follow Pete at Forex Shrink. Any other place that people could get in touch with you and
so I have my website, forexshrink.com. We have been doing 3-month, 10 people presentations, university, what we like to call them. And the reason why we spend 3 months with people is because I can't give you in 2 days or 3 days a system that is going to work, right? If you're going to make the sacrifice of time, I will make the sacrifice of a guarantee on your success. And that is, if you show up every day, I will show up every day, and I will show you what to look for. And that is key. Please do not spend your money, people, your hard-earned money, on 2 to 3 day packages. They have nothing to offer. If it was that easy, this world would be a totally different place. Money would not even exist because it would be out of circulation. Okay, so repetition, create an understanding, find your understanding in the largest market in the world. You don't have to catch every move. Catch 30 pips. Try to accumulate 500 pips a month. Try to double your positions every 2 months, every time you capture those 500, and you will see in the matter of 2 years what you can do. It is amazing. If anything, right now at the end of this presentation, I suggest that you take and see with $5,000 if I risk every day 1% of my account, and I am looking for every month to capture 500 pips. And every time I capture 500 pips, I'm going to add to my position size. See what you can do if you capture 500 pips 12 times, which could be a fiscal year, or if you're ambitious, you could do it in 4 months. It all depends. So I want to thank you guys for your time once again. I'm sorry if I was kind of over the place, but it was last minute. This came up yesterday, so I do apologize.
Thanks for your time, Pete.
No problem.
Appreciate it, and good hunting the rest of the fall trading season. Keep in touch, and
for sure.
I appreciate all your retweets on Twitter. Glad I know you, Pete.
Pleasure's all mine, my friend.
Okay, buddy. Thank you, Pete.
Take care.
Adios. That's Pete Souris at Forex. So here's my wrap up, guys. It looks like the euro wants to rally into the ECB tomorrow. I'm thinking 14.20 would be a good sell zone. If the opposite occurs, I'm looking at under 112.50 for a buy in euro. Pound holding up well, even euro pound still negative, looking for lower levels. We're getting close to our levels in the Canadian. We were talking about 31.25, 31.50. So we're almost there. This was a very good call by our community yesterday. I want to thank everyone for their contributions today. I hope you guys enjoyed Pete. Did you enjoy him? So I want to thank everyone individually. I want to thank Fame and UK Kev and Alien and Tico and Jose. Thank you, Jax, Ali, Goldie, Clever. Thank you for all your shares. Khalid, nice trading today. Slave, welcome to our community. You're a master, veteran. Mauricio, Forex Stop Hunter. John, Malcolm, Dev, FX Street. Simon, McSood. Yohei, Richard, John, Abel, Luis, Dr. Severaman. Enjoy the rest of your day. Good hunting, everyone. Remember, don't just count your pips, count your blessings. We have the ECB tomorrow. We have Mauricio has definitely arranged a great crew to cover the ECB tomorrow. I'll be here about an hour earlier tomorrow. Hi, Rob. How are you? Okay, everyone. I'm glad you enjoyed. Mission accomplished. And I'll see everyone tomorrow for the ECB. You're very welcome, Jose. Adios, everyone. Okay. Yeah, read Mauricio's article. And I'll see everyone tomorrow for the ECB.